The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Friday. TGIF. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That is the number. It has not changed. Give me a call. Let's talk about this market. You can listen to Breakout Investing 5 days a week now on TFNN from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. If you can't listen live, no worries. Head over to iTunes. You can pick up a podcast over there. Feel free to leave a review. And if you want to listen to the show on your smartphone, that is easy to do. You're out on a walk or run. Plug those earbuds in, open your smartphone browser, type in TFNN.mobi, and you can listen to the stream that way as well. And be sure to check out Tiger TV as well on the homepage of TFNN.com. The show is carried live on Channel 1. It is archived in Channel 13. If you watch on Tiger TV, you can look at charts live right along with me. Folks, don't forget about the Halloween giveaway. TFNN, in conjunction with Great Panther Silver, October 29th, 30th, and 31st. Going to be giving away a total of 27 pieces of free silver for Halloween between 9 a.m. and 6 p.m. every day, each hour on October 29th and 30th. Going to get a free half-ounce piece of silver. October 31st, Halloween Day, you get a 1-ounce piece of silver. You could register for free right on the homepage of TFNN.com for the Great Panther Silver Halloween giveaway. All right, let's check on these markets as we wrap up the week here. Unfortunately, the NASDAQ is working on its 6th straight decline. It can't get out of its own way here. Not too much selling in the tech index today. It's down a little over 2 points to 3,047. Not a whole lot of volume behind the NASDAQ's move today. At last check, it was NASDAQ volume tracking about 5% below what we saw yesterday, which was pretty average at around 1.57 billion shares. Move over, take a look at the S&P 500 here. We'll see modest declines in this index as well. S&P 500, we pull it up here, sitting right at its 50-day moving average. Look at that. Its 50-day moving average is at 1428. Where is the S&P trading right now? 1428.97, down close to 4 points. So, clearly the markets are vulnerable here. NASDAQ was the first index. NASDAQ Composite was the first index to take out its 50-day moving average. S&P 500 looks like it's ready to. Not a whole lot of volume on the New York Stock Exchange today, tracking about 10 to 15% lighter than what we saw yesterday, which was pretty much average volume on the NYSE at 643 million shares. So we're tracking about 10 to 15% lighter than that today. But market definitely looking vulnerable. Let's check in on the Dow too. I don't really follow the Dow a whole lot, but it is in a similar situation to the S&P 500. Really just sitting right at its 50-day moving average as well. Dow is down just about 3 points today to 13,323. Its 50-day line is at 13,318. So basically sitting right at the line. Well, we've been waiting for Workday to come public, a huge day for 3 IPOs yesterday. We saw the initial public offering of Realogy, RLGY, Shutterstock, SSTK, and Kythera Biopharmaceuticals, 3 stocks that were up more than 20% each yesterday. Workday comes public today. A lot of anticipation for this IPO. Again, good pedigree here. David Duffield, who was the co-founder and former chairman of PeopleSoft, is now the co-CEO at Workday. Company provides on-demand software for human capital management. It was initially going to price, or the proposed range was $21 to $24 a share. Then Workday raised it to $24 to $26. It priced at $27. You know where it opened at today? $48.05. $48.05. The stock was recently trading around $49.69, up, that's right, 77.5%. So ironic that in a market that is so unsettled here to see these IPOs going gangbusters. So huge debut today for Workday, company in a very similar business to Workday, riding its coattails higher. This one's been a monster winner. Ultimate Software Group, ULTI. You can see it has been respecting its 50-day moving average in recent days. The stock is up 3.9% to 103.36. This field of human capital management, talent management software, been a lot of consolidation in this group among companies involved in that particular business, but Ultimate Software having a good day, riding Workday's coattails higher. But let's check in on some of these IPOs that came yesterday. Mentioned Realogy Holdings. We'll see what it is doing. This stock is a U.S. franchisor of residential real estate brokerages. It was up 27% yesterday on its first day of trading. Right now, the stock is up an additional 19 cents to 34.39. Shutterstock, SSTK, also had a great day yesterday, up also 27% on its first day of trading. It let's see, it priced at where did it price? $17 a share it priced at, but today it's up another 34 cents to 22. And Kythera, this is a really interesting company here. I mentioned it yesterday on the show, but Kythera also had a great day, up 24% on its first day of trading yesterday. It is down close to 3% today to 19.25, but it priced yesterday at 16, so still doing pretty well. But Kythera Biopharmaceuticals, very speculative, but they are trying to commercialize an injectable treatment for double chins, interestingly enough. So IPO market definitely showing signs of life. Let's check in on some economic data as well today. We had a pretty nice reading from the University of Michigan Consumer Confidence Index. It showed a preliminary reading of 83.1 in October, the highest level since September 2007. The final reading in September was 78.3, so it was nicely higher. The data confirmed a reading earlier this week from the Investors Business Daily TIP Economic Optimism Index. That index hit a near 6-year high earlier this week on Tuesday. So one thing the market has working for it, not sure how much it means right now, but does have a confident consumer working in its favor. Also had a reading on wholesale prices earlier today. The latest reading from the Producer Price Index showed a 1.1% increase in September. A little hotter than expected. Economists were looking for wholesale prices to rise 0.8%. Overall, the PPI has risen 2.1% in the past year, right around the comfort level for the Fed. Core PPI, which excludes food and energy prices, was flat in November. That was a little better than expected. Core prices are up 2.3% in the past year. Coming up next week, we've got consumer price index data on Tuesday. A lot of other economic data and earnings reports as well that we'll get into a little bit later. Let's check in on the VIX here. been paying attention more and more to the VIX. I know this is a standard part of a lot of investors' arsenal. The VIX is still having some problems here, still in a downtrend, no question about it. I've been saying all along it is probably going to face some resistance here at 18, but the VIX higher today, 1.8% to 1587, up close to 2% to 1587, trying to get back above its 50-day moving average at 1541. So far, so good. But again, its 200-day moving average here at 1806 could be resistance. So we'll keep an eye on the VIX. Crude oil today down 21 cents on the day to 91.86 a barrel. For the week, crude oil was up 2.2%, and gold down at $10.90 to $17.59.70 an ounce. Check in on the GLD. We'll see that it is down $1.19 to 170.13. It is looks like it's down in 5 out of the past 6 trading sessions, still holding above its 50-day moving average at 165.35. The overall market really is at an inflection point here. Again, with the NASDAQ composite underneath its 50-day moving average, and you've got the Dow and the S&P 500 trying like heck to hold these support levels. When I look at the amount of weak stock charts out there, it does tell me that the potential for more downside probably outweighs the potential for upside from here. But you hear Tom and I always joking about a deviant market, and when there's too many bears out there, sometimes the market can do what is least expected. But when you just look at technical indicators, certainly the negatives seem to outweigh the positives at this point. Let's see. Bond yields. I don't think I touched on bond yields. 10-year note looking lower for the 4th straight session in terms of its yield, down to 1.66%. The 30-year bond also lower, down to 2.84%. A couple of story stocks today. We talk about Alcoa not being that relevant a stock in the market anymore. Of course, they started off earnings season this week. Another irrelevant stock, but a newsworthy stock today, Advanced Micro Devices. The stock has just been in a steady downtrend for as far back as you can see. It's getting hammered hard today, down 12.7% to $2.80. Of course, AMD makes processors for PCs. They cut their third quarter revenue forecast last night, citing weak demand across all product lines. It now sees sales in the third quarter of $1.27 billion. The current consensus estimate was for $1.38 billion. So bad news from Advanced Micro Devices. Let's take a look and see how that Philadelphia Semiconductor Index. This is another problem area for the market. I mean, the semiconductor index is just in such a steep downtrend here, really not showing any signs at all that it's going to start to rally anytime soon. At some point the bad news is going to be priced into the chip makers, but there's just not much leadership at all in the semiconductor space. And again, that revenue warning from Advanced Micro Devices yesterday did not help matters. All right, when we come back, we'll check in on Apple. Of course, we've got financial earnings to get to, JP Morgan Chase and Wells Fargo, see how financials are doing today. A few more earnings reports, and of course, there are some interesting gainers out there to talk about. We'll do that in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. So another day of modest losses for the indices. Again, market looking a little bit iffy here for my Ultimate Growth Stocks newsletter and model portfolio. I have been scaling back, which I think is the right thing to do here as uncertainty continues to build in the market. When you have the market in a downtrend like this, and Apple acting the way it is, and really several leading growth stocks out there under quite a bit of pressure in recent days, doesn't really make sense. It's just a difficult environment to make money in stocks. When the market trend is down and you're trying to buy a stock and make money, you're swimming against a very difficult tide. Checking in on shares of Apple today, up $1.45. Percentage gain, not that much, only about 0.2%. Last trading around 629.55. A lot of technical damage done to Apple over the past 3 weeks or so, sitting firmly underneath its 50-day moving average here. The 50-day line right now is about 660. Apple is about 30 points underneath that, what used to be a support level. So at this point, I think that 50-day moving average, similar to what we were talking about the VIX being underneath its 200-day at around 18. Apple is going to face similar challenges if it starts to rally again and gets close to that 660 price level. It could easily get turned away. That is what happens when you start to see early signs of institutional selling in a stock, and that's what we saw in Apple basically starting in mid to late September, and some low-volume rallies since then. So I wouldn't be surprised to see Apple continue to flail around here underneath the 50-day moving average. All right, let's check in on some of the financials here. Why don't we start by taking a look at the Financial Select Sector Spider Fund. It is underperforming today, down 1.4% to 1581. Still holding above its 50-day moving average at 1544. Not damaged yet, but it looks like we're going to see a higher volume decline for the XLF today. XLF is weak because, well, financials are weak, of course, and JP Morgan Chase earlier today reported earnings. This one looked like it had a chance for a technical breakout, but the numbers were going to have to be really, really good, and, they weren't bad by any means, but just kind of ho-hum. Shares of JP Morgan Chase right now down 1.1% to 41.65. 41.65 last price for JP Morgan. Earnings were up 37% from a year ago to $1.40 a share. That was about 16 cents above the consensus estimate. Sales up 6% to $27.8 billion. Credit loss provisions, basically money set aside to handle future loan losses. They came in at $1.79 billion, down 26% from a year ago. That's a good sign. JP Morgan's investment banking arm turned a profit of $1.57 billion in the quarter, down 4% from a year ago. So kind of muted response from investors to JP Morgan's report. Wells Fargo selling a little more intense here. You get a gap down underneath the 50-day moving average. Significant technical damage done to Wells Fargo today, down close to 3% to 34.15. This stock was also showing relative price strength ahead of the earnings, but take a look at the numbers. Earnings were up 17% from a year ago to 82 cents a share. Sales only up 2% to $22.6 billion. Credit loss provisions at Wells Fargo totaled $1.59 billion, just down a little bit from $1.8 billion in the year ago period. Remember, earlier this week, the U.S. government sued Wells Fargo, accusing the mortgage lender of reckless lending during a 4-year period between 2001 and 2005. So not a great day for Wells Fargo. Moving on in earnings, take a look at J.B. Hunt Transport Services. Big day for this stock. Nice gap up close to 7% today to 58.49. Earnings were up 14% to 65 cents a share. Sales up 11% to $1.3 billion. It's a trucking and logistics firm. Ironically, J.B. Hunt is not getting much of its revenue anymore from its trucking business. Trucking revenue in the quarter fell 8% to $117 million. Where it's making its money is in intermodal. The intermodal unit that basically handles containers that travel by ship, rail, truck, etc. Revenue there rose 15% to $794 million. So made up a little more than half of total revenue. So good numbers at J.B. Hunt Transport Services. When we come back, we'll talk about Infosys. We got a merger and acquisition news involving Ecolab, ECL, and then we'll start talking some growth stocks as we put the finishing touches on this week. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direxion Shares. To learn more about technical tools for the sophisticated active investor, hit the Direxion Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. We have in on the U.S. dollar index. Dollar is lower today, but not by much, 79.65. Last quote for the U.S. dollar index down about 12 ticks. Just like the VIX, just like Apple, U.S. dollar index sitting below some potential resistance levels here Right now trading at 79.65, 80, 70, 80, 80 looks like potential resistance for the U.S. dollar index. So right now in the market, we're just dealing with a market where there's probably some profit taking. Obviously, there's some anxiety about third quarter earnings season. We've got a bunch of reports coming up. Next week, several financials set to report. I don't think that J.P. Morgan and Wells Fargo got things necessarily off on the right foot in terms of the financial sector, but Citigroup reports on Monday. Tuesday, we've got Goldman Sachs. Bank of America reports on Wednesday. American Express also on Wednesday as well, and then a whole slew of tech companies next week that could potentially be market moving, no doubt about it. Wrapping up some earnings here, we mentioned J.P. Morgan Chase and Wells Fargo. Nice numbers from J.B. Hunt Transport Services. Infosys, INFY, the news not very good at the tech outsourcer. Infosys is based in India. They also provide engineering services. The company reported fiscal second quarter sales that missed estimates and also gave disappointing guidance. As a result, you have a nasty gap down below the 50-day moving average. Shares of Infosys right now down about 8.5% to 44.14. Earnings were up 16% from a year ago to 79 cents a share. Sales were up 13% to $1.87 billion. Both the bottom line and top line growth was a nice acceleration sequentially from its fiscal first quarter, but the sales miss and disappointing guidance is bringing sellers out in the stock today in spades. In merger news, let's check in on shares of Ecolab, see how investors like the news of its acquisition. Apparently they do. Ecolab up 3.9% today to 66.16. They are acquiring privately held Champion Technologies for about $2.2 billion in cash and stock to get a bigger piece of the oil field chemicals business. Ecolab will pay about $1.7 billion in cash and also issue about 8 million shares of stock. Last year, Ecolab bought rival Nalco Holding for $5.4 billion. So growth through acquisition strategy clearly for Ecolab. Investors like the sound of this acquisition. Normally the acquiring company is under pressure on news like that because of concerns about earnings dilution. Ecolab did issue or is going to issue stock in this deal, but pretty telling performance for the stock today, again up 3.9% to 66.16. Some other movers today. Let's take a look at a wildly speculative name here, Glue Mobile. Glue Mobile is a mobile video game maker. A company said in a filing that venture capital firm GGV Capital bought 3.24 million shares of the stock. See, Glue has been hammered by selling in recent weeks, but it is bouncing back today. Maybe a dead cat bounce here. A lot of technical damage done here that's going to most likely take a lot of time to fix, but Glue up 16.3% today to $3.36. Take a look at shares of Celgene. Celgene has been a long time biotech leader. It has given back some of its gains, but still up 1% to $78.49. The company received FDA approval for another indication for Abraxane. Abraxane was initially approved in 2005 for the treatment of metastatic breast cancer. Earlier today, the FDA approved Abraxane for first-line treatment of advanced non-small cell lung cancer. So Abraxane doesn't make up a huge amount of Celgene's revenue right now. One of its big drugs is a Revlimid for Celgene, but earnings are due on October 25th at Celgene. Again, very consistent growth at this company. Earnings should be up 24% to $1.26 a share. Sales up 13% to $1.4 billion. So Celgene out with earnings on October 25th. Good news for one of its smaller drugs, Abraxane. Kind of tells you what kind of market we're in here, though. This market, you see some good news, and the market doesn't respond to good news, and that's the case with Celgene today. Hit an intraday high of 79.75, now trading near its session low, still up 1%, but some sellers in the stock today despite that FDA approval. Also, Biogen, BIIB. Biogen had more good news on its oral MS, multiple sclerosis pill BG12. This is expected to get approval from the Food and Drug Administration and should be a big revenue driver for Biogen. The drug is not approved yet, but all of the trial data, late-stage trial data, has been positive. Today, Biogen announced more positive data for BG12 as a treatment for patients with relapsing, remitting multiple sclerosis. Look at Biogen, though. Down for, seven straight days now. Underneath its 50-day moving average. Sellers clearly in control in this stock. But the thing about Biogen, I think I have a weekly chart for the biotech here. Biogen IDEC, here it is. The thing about Biogen is that you're talking about a stock that has made a massive price move. You had a breakout in all the way back in late 2010, over $60 a share. It runs up to about $150 thereabouts, and now is kind of breaking through its 10-week moving average here. Probably see pretty strong support at that 134.50 level, but that is still about 13 points above its 40-week moving average. So Biogen, one of several big leaders out there, really starting to show chinks in its armor here. Again, good news for BG12. The stock is under quite a bit of pressure today. Swing back to a daily chart for Biogen, and we'll see a break below the 50-day moving average. And look at the support that 50-day line has been for Biogen pretty much since the summertime. Just good supporting action, and here it doesn't look like it's going to be able to hold the line. So we'll see what the future holds for Biogen. Good high-quality company here, but under quite a bit of selling pressure. Check in on shares of Lulu. Lulu was kind of outperforming today, holding up just fine. Like to pay attention to Lulu because it's still acting well out here. It is still holding above its 50-day moving average, right around 69. Lulu right now up 1%, bucking the market trend to 73.41. Earnings aren't going to be for a while here. Don't have the estimate data, but Lulu came out with earnings not that long ago, so their next report won't be until late November, but a good, steady grower. High multiple stock, but Lulu tends to deliver the goods every quarter in terms of big earnings and sales growth, and pretty well-run company. But being a high multiple stock, normally vulnerable during periods of market distribution like this, but so far so good. Lulu hanging in there just fine. Another high-quality retailer, similar situation to Lulu, fast-growing, high multiple, but still hanging in there pretty well. Chart doesn't look as good as Lulu's. Ulta, one of several growth names out here, flirting with a break below the 50-day moving average. Ulta's 50-day line is at 94.50. Shares were recently trading around 95.20, so only about 70 cents above the 50-day moving average. It is down in 4 out of the past 5 sessions, down 0.5% today to 95.20. Same with Ulta doesn't report earnings until late November, but another retailer looking a bit vulnerable here. 877-927-6648. Folks, give me a call. Talk about this market. In the meantime, VFC. We'll check in on VF Corporation. This is a company, boy, they own a lot of brands. Wrangler, Lee, Nautica, North Face, Timberland, some well-known brands, and look at how this stock is holding up here. Very bullish chart showing strength, support. holding above its 50-day moving average. Shares of VF Corporation up 1% today to 161.61. Decent volume in the stock. Let's swing over, take a look at a weekly chart, and I'm going to just talk about a potential yellow flag, maybe even a red flag, and that is that VF Corp is in one of these famous late-stage bases. This is like one main issue with the market right now. When my growth screens are really not giving me much to buy, it's either because I'm looking at a lot of extended stocks that have run up too far too fast and they're way past proper buy points, or I'm looking at stocks that are forming bases, but they are in late-stage bases. In other words, they've already made a huge price run over the past 2 to 3 years, doubling, tripling in price, something like that. And VF Corporation, you can see back in mid-2010, it was a $70 stock, hits a recent high of around 162, 163. Still looking good here, holding above its 10-week moving average on the weekly chart. But even if market conditions improve and you see, heavy volume come into VF Corp and, signs that institutions are buying, I'm just wary of a late-stage run here. Probably a name that I'm going to avoid for the time being. Some decliners to talk about today. Let's check in on shares of Western Digital. These disk drive makers really, having a rough go of it. Both Western Digital and Seagate were downgraded today to sell by Citigroup. Same story. Advanced Micro Devices warns on revenue because of a sluggish PC market. A sluggish PC market certainly is not good news for the disk drive makers. Shares of Western Digital today down 1.5% to 36.03. Selling a little more muted in Seagate. You can see it touched its 200-day moving average today at 27.24, but it's trading up near its session high, still down 21 cents to 28.04. So initially, very early here, initially showing support at its 200-day moving average is Seagate, but another stock just like Western Digital that has been under a lot of selling pressure in recent weeks. Another name under selling pressure. This is a name that I actually just recently decided to get rid of in the Ultimate Growth Stocks model portfolio. I bought this stock in anticipation of a bona fide breakout over $113 a share. The buy was made right in this area here, late August, early September. LinkedIn, after the breakout over 113, hit a high of 125 thereabouts. Has been under selling pressure for quite some time. So I took some profit here, took some money off the table. LinkedIn having a rough day today, down $2.67. About 2.4% to 111.10, so it is trading below that last swing point of 113. More importantly, it's having problems at its 50-day moving average here. So it's really what you're seeing in most of the growth stocks that I'm following. Yes, some are still holding support, but many more are breaking below these this key support level, which is the 50-day moving average. When you're in a good market uptrend and institutional money coming in from the sidelines and money being put to work, some of these big growth stock leaders, they'll break out of initial consolidations. They'll come down to that 50-day line and they'll bounce like clockwork. The fact that they're not bouncing, the fact that many are undercutting the 50-day moving average is just a sign that they're obviously there's more selling going on than buying in the market right now, but it is troubling action for the most part. So LinkedIn not acting that great. Plenty of other market leaders underneath their 50-day lines as well. CF Industries, a lot of bulls still out there in the fertilizer space, but CF Industries looking very vulnerable up here. It is down 2.1% today to 210.25. Takes out its 50-day moving average for the first time since all the way back in May, and the 50-day line has been a good support level, but CF Industries breaks below the 50-day line today, not finding support. Plenty of other examples too. Mentioned Mellanox, MLNX. This company reports earnings next week, stuck underneath its 50-day moving average. You can see it broke below the line back in September last month, tried to rally back above, fails. If it tries to rally back above this line again and fails again, here you're looking at actually a good short candidate. Repeated resistance at the 50-day moving average can often be a sign of additional price weakness. So we'll see what Mellanox has to say next week. They report earnings on Wednesday. Big quarter of growth is expected. Will it be enough to help the stock in this type of market? I'm not so sure. Stick with me, folks. Final segment coming up. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. Yeah, busy week of tech earnings next week. Not out of the question that we could see some good news. I think there are going to be some tech names that report where the results are going to be sort of ho-hum, but it will be interesting to see what Google has to say when it reports earnings. When is Google's earnings next week? Thursday the 18th, Google will be reporting. Here's a look at a daily chart for Google stock right now, down 666. Isn't that's an unlucky number. Down 666. Shares of Google to 744.82. Having some trouble here, holding on to its 20-day simple moving average. If it breaks there, perhaps a trip down to its 50-day line around 703, 704 could be in the cards. A lot of that will be predicated on what the company has to say next Thursday. Earnings at Google expected to slow quite a bit, only up 9% from a year ago to $10.58 a share. Sales, excluding traffic acquisition costs, should be up big, up 57% to $11.8 billion. Pretty impressive top-line growth for Google. Google's got a lot going on. It's selling a tablet to compete with the iPad, the Nexus tablet. Investors will be looking for some color on how that tablet is doing. Hard to imagine it's making serious inroads, but Google has a lot of good things going on too, in improving search business. And also its Android operating system. A lot of cell phones being out there that use the Android operating system, so that's been doing well for Google as well. So we'll see what that company has to say on Thursday. Taking a look at another retailer here that I was looking at, Chico's Foss, a women's retailer. Another name just sitting right here at the 50-day moving average. Is it going to base and consolidate gains and hold above the 50-day moving average? Only time will tell, but volume is tracking to come in higher than Thursday. It is clinging to the 50-day moving average here, down 1.8%, underperforming the market today to 1813. That's a look at Chico's Foss. And then a name I mentioned yesterday, Jazz Pharmaceuticals, fast-growing company, holding gains nicely after a big move last month in early September, when the company received a favorable court ruling over its a patent ruling regarding its drug Xyrem, which is used to treat excessive daytime sleepiness in patients with narcolepsy. Big growth at Jazz. They are going to be out with earnings late October, early November. Earnings up 40% to $1.32 a share. Sales up 145% to $179.9 million. So really a bullish fundamental story going on at Jazz Pharmaceuticals. And other leaders out there in a lot of trouble here. SolarWinds. Remember when a lot of people were chasing SolarWinds higher? It is looking like it's ready to base here. It's been below its 50-day moving average for several days now. Firming up a little bit today, up 11 cents to 53.42. Amazon as well broke below its 50-day moving average this week. So a lot of strong performers here under a lot of pressure. It means defense is the best course of action. If you want to see how I'm navigating this market, please check out a 30-day free trial to Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. Click on the Newsletters tab, then Investment Newsletters. You can try Ultimate Growth Stocks out 30 days for free. I do a weekly update every Tuesday and then send out email buy and sell alerts in between. Mentioned earnings next week. Citigroup reports on Monday. On Tuesday, we've got Goldman Sachs, IBM, Intel, and on Wednesday, Bank of America, American Express, and eBay. Busy day Thursday of earnings as well. Coming up next, the Tom O'Brien Show. Hope you all have a great weekend. I'll be back Monday, 3 o'clock Eastern, with another edition of Breakout Investing. Take care, folks.